Hi guys, I'm Manu and welcome to another episode of Sweet Money. How much money do I need in order to retire comfortably? You're not going to like this answer, but the answer is it depends. Now, before you can answer that question for yourself, grab a pencil, grab a pen, grab a calculator. We're going to be doing some math, all right? I know you don't like this math thing, but hey, it's just how finance and accounting works. These are the 7 questions you will have to answer in order to derive that magic number you seek. Income required to support your retirement lifestyle based on today's price index. The hardest question to answer is how many years will you live after retirement? Compounded inflation during retirement. What is the compounded inflation from now until retirement? Compound your current investment portfolio till your date of retirement. Any drop or increase in income by decade during retirement. The difference between your current portfolio versus your desired income equals how much you need to invest in order to cover the difference. Now, let me pause this for a second so you can absorb this number 7, which is very important. We openly talk about our fears, fear of height, fear of certain animals, so on and so forth. However, we are so fearful of financial distress and the fear of the unknown when it comes to retirement that we deliberately choose not to talk about it. We deliberately choose to push this topic aside and pretend like it doesn't even exist in our lives. And the fear of running out of money during retirement is a very scary thought. The question I get from my clients is, how much do I need when I retire? And the question that I fire back is, based on today's price index, how much would you need if you retired? And all I get is a sound of crickets. And friends, the harsh truth is, until you don't get your finances in order today, it is impossible to plan for the future. So guys, this is a multi-series course. This is your first class, and there's multiple classes to follow afterwards. By the end of these sessions, you will know, based on the calculations that I will provide, how much you need in order to retire and live the lifestyle that you want. If you're expecting rainbows and unicorns, you've come to the wrong place. This, my friends, is a school of hard knocks.
You know me well from nightmares of a lonely cell.
Now, before you can run through those 7 questions I had asked at the very beginning, the first thing you need to do is lay your foundation. And that foundation is called your budget. So what we're going to do in today's session is help you build that budget. The number 1 rule and only rule you will follow when making your budget is do not arbitrarily make up numbers in your head. If you do that, you're setting yourself up for failure. Now, if you own a business, it is practically impossible to do a proper budget through a video tutorial. What you need is one-on-one coaching. I've provided my website in the link down below. Click it, reach out, set an appointment, and we'll get you started on a zero-based budget and have you on your way. The whole purpose behind a budget for your business is so that you can strategize, invest, and mitigate risks. It helps you unlock opportunities that you didn't even realize existed. Let's go on with the budget. Step number 1 is your revenue. Your revenue is how much income was deposited in your bank account. Look at your last 4 pay stubs. I want your net income. And the reason why I want your net income is because your taxes have been deducted. Depending on where you are, depending on where you are in the world, your tax rate and structure is different, which is why I want your last 4 deposits and extrapolate that for the full year. So for instance, if you're in Canada and your last 4 pay stubs were $5,000 and you're paid monthly, that means your annual deposits, your revenue to spend is $60,000. Now, if you're running your own business and your income is coming in via dividends, it's time for you to fire your accountant. you are missing out on a lot of opportunities. Please watch my video called RRSP and TFSA has been decoded. You are doing yourself a disservice. You are destroying your own retirement on purpose. I don't know why anyone would do that, and I don't even know why an accountant would encourage it, but that's exactly what you're doing to yourself. Now that you have your annual net income, you will create two columns. One column will be called my needs, and the second column will be called my wants. And within each of those two columns, you will divide them in two other columns. So in total, you now have 4 columns. 2 columns for your needs and 2 columns for your wants. Now, in your need column, you will have a subheader, which we'll call expense description. And then right next to that, you'll have a column that's called amount. When you come into your want section, your first column will be called expense description, and the column right beside that will be the amount. Just so that you know, a need is a necessity. A want is a desire. And differentiating the two is very important if you want to become a wolf and go into beast mode and achieve your financial dreams. And guys, if you love money as much as I do, then give me some SLC. SLC stands for subscribe, like, and comment. In your need list, you will have the following expense descriptions: rent, mortgage payments, property tax, condo fees, home insurance, groceries, and this does not include eating out, utilities, auto payments, auto insurance, auto repairs, medical bills, clothes, a detailed list of day-to-day living expenses such as hygiene products, grooming products, home decor, home repairs, any alimony or child support payments. And the day I hit 1,000 subscribers, I will bring in a marriage counselor to talk about relationships, because the right partner can help you achieve your potential. Moving on, your saving. Now, your saving is a 15% plug of your net income. Okay? So I don't care what you're saving today. If it's more than 15%, great, put that amount in. If it's less than 15%, I want you to plug in 15% of your annual take-home pay. And then what you do is you will take that 15% of your annual take-home pay, give that money to a financial planner who will help you strategize. Now you have your needs, and beside each need, the items I had listed out, you will put in the amounts. If you're not sure, go look at your bank statements, go look at your credit card statements, look at your past 3, 4, 5 months, get the trend, and extrapolate that for the years. And once that is done, we then move to the needs section. In the needs section, I want you guys to put the following items. Number 1 is your groceries. And I know what you're thinking, but we put groceries in the want section. Why am I putting it in the needs section? I'll tell you why. When you go to your groceries, you buy a lot of UC. And for those of you who have not seen my previous videos, UC stands for useless crap. UC, therefore you buy UC. Get it? Get it. See, when you go to the grocery store, you buy things such as lottery tickets. You walk through that confectionery aisle and you buy your cookies and your chips and your sodas. You see items that you do not need. These should be treats, not a weekly habit, right? Because there's certain things that control you, but you have to learn to control them. And food is one of them. Money's another thing. Exercise is a third item. So going back to your need column, if you had put $200, I now want you to think with pure integrity and honesty and sincerity, how much of that $200 weekly grocery bill are made up of items which are not necessities. And this is a very painful exercise. So I want you to be very honest with yourself. The next item is your auto payment. I know what you're thinking. I put auto payment in my needs section. Why are we putting it in the want section? It's the same concept as your groceries. If you're driving that BMW or that Mercedes that you can't afford, then how much can you save if you got rid of that and bought an average car that got you from point A to point B? And really, why do you want that luxury car? Is it a status symbol? Is it to impress your friends? Is it because you feel insecure? What's the reason? And it can't be because you want to go from A to B because there's cheaper alternatives. So that is not the reason why you drive that car. I bet at this moment, you're probably not liking me, and that's okay. My job really is not to be your friend. My job is to be your coach. My sole purpose is to make you realize how external influences, social media, societal pressures, our desire for status is keeping you poor. It's making you make decisions which are doing more harm than good to you. And for you to have this paradigm shift, it will require tough love. And this will require me to tell you exactly how it's going to be. Think of it like studying for an exam, trying to lose weight. It's not glamorous. It's not fun. You feel like giving up. But I will not let you give up. You and I will stick together until you cross that finish line. Close. No comment. Yes, I know it's in the other column, but you will now add it in this column and then break that amount into two buckets so you know what's necessity and what is the bling bling. Moving on. Your telecommunication, your cell phone, your internet, your OTT platforms, eating out, entertainment. This includes your alcohol, your cigarettes, shows, events, travel, including the UC stuff you purchase during your travel, like the $50 Mickey Mouse t-shirt, which has a gazillion% markup. Look at your personal life and add anything else which is personal to you and to your lifestyle in this section. Now, if you live on your own, do this exercise in isolation. If you live with a partner, this must be done in tandem. Otherwise, this exercise is futile and has no value whatsoever. I made a video called 5 Money Rules for Couples Who Have Shacked Up. And budgeting was one of those rules. And that rule flows into this exercise because your budgeting today will impact your retirement tomorrow. And I want you to do this exercise with full integrity and full honesty. If you lie, the only person you're lying to is yourself. And when your budget is done, when you have your revenue, when you have your expenses in your need column and your expenses in your want column with your 15% saving, you will notice two things. Number one, if you end up with a positive cash flow, you will automatically realize that you don't have any debts. However, after this budgeting process, if you end up with a negative cash flow, you will come to the automatic realization why you are struggling to pay off your credit card debts, your HELOC, or any other loan you may have taken. I want to share a secret with you, and please pay very close attention. The common person thinks like a sheep. When they earn their income, their purpose is to save money. How can I save $100, $500, or whatever the amount is? A wolf, when they earn their money, thinking of saving is not even in their realm of existence. Their thought process is, I have earned this money. How can I now grow this money? How can I double it, triple it, quadruple it? And that is the difference in how a sheep thinks and how a wolf thinks. A wolf will not think twice before buying that fancy pair of sunglasses. They will not think twice before they buy that fancy car because they know they can take their income and grow it, which will help them purchase those fancy items that they want. However, before you can get to that stage, you need to first learn how to control money. Because as of right now, money is controlling you. We need to flip the script. You need to be the master of your destiny. You need to control cash, not cash controlling you. And the day that happens, you will then become that wolf in which you will then be able to afford whatever luxury you desire. So I am going to leave you with some homework. I want you to finish this budget. And when we meet in the next video, we will take it from there and move forward onto the next steps and help you get to that magic number of how much you need to retire. And remember, it all starts with a simple conversation.